Welcome to Within the Frame, where we bring you today's most pressing issues from across the globe into focus. I'm Kim Mok-yeon. U.S. President Donald Trump is moving forward with his tariff agenda. He announced plans to impose a 10% tariff on Chinese goods starting February 1st, citing China's role in fentanyl trafficking to Mexico and Canada. Now, this follows his earlier decision to impose a 25% tariff on imports from Mexico and Canada, also effective February 1st, as part of his broader efforts to combat drug flows and illegal border crossings. While Trump has delayed announcing broader universal tariffs, economies around the world are keeping close tabs as the measure expected to have a wide-ranging impacts on global trade, including potential effects on domestic businesses. For more on the impact of Trump's economic policies, we invite Hwagyun Kim, professor of banking and finance at Texas A&M University Mays Business School. Welcome, Professor.
Thank you very much for the invite.
And also joining us is Oh Jun-seok, Dean of College and Economics at Business at Sookmyung Women's University. Great to have you with us again, Professor.
Thank you for having me.
So let's start with Professor Kim. So although President Trump stated he would sign an executive order on universal tariffs on his first day, there was no mention of the specifics in his inauguration speech. What do you think is the reason behind this?
Historically, inaugural speeches tend to be broad and thematic, often focusing on national values and overall direction of the administration. So it is rare for any president to use this type of inauguration speech to deliver detailed plans. But Mr. Trump has been unlike many other former presidents, so this rule probably doesn't apply. Therefore, we were somewhat surprised. Indeed, President didn't immediately impose new tariffs on his first day. But as you mentioned in the beginning, this relief quickly dissipated. And Monday morning, hours after the speech, Trump announced plans to implement 25% tariffs on Canada and Mexico, and also 10% on China from February. All these kind of things already started giving some detailed plans right after the speech. So details are uncertain yet, but these countries are already responding to Mr. Trump. So clearly, I think that Trump, as a skilled negotiator, I think he is using a more timed approach in terms of giving big picture first and then start giving more details. I believe that he doesn't still have all the details about individual countries, but at least I think basically over time, he's going to implement tariffs to most of the countries.
Right, so more details on tariffs will be coming through in the coming months. Now, following this news, the Korean $1 exchange rate has fallen to around 1,431 in just 1 month. And some analysts suggest this may be due to expectations that Trump will adopt a more relaxed tariff policy. Professor Oh, do you think the strong dollar trend would ease?
Yes, I do. To tell you more, the dollar has risen against other major currencies, and for the time being, it is likely hold its position. However, the speed and range of increase will be lessened ever more. Other things being equal, very simply speaking, the stronger dollar means the more Americans buy, and they could spend more when they are traveling abroad. The dollar value against the weighted basket of major U.S. trading partner has risen by around 17% since 2021. This might be one of the reasons the strong dollar, as well as protectionism, gets political handshake for the short time. It is true, American economy has been on a tear, successfully resilient after COVID-19. But can it last? It's a different story. Prudent fiscal policies and less foreign debt has helped to insulate most trading countries from the effect of strong dollar. When it keeps rising, though, trade partners of commodity importers and then emerging markets have a lot more to worry about. It might be expected further major trade partners will make a consecutive transition of their business weight from the United States to European markets and alternative trade partners. To handle these risks, the U.S. take a dollar-positive policy for global investors, such as a domestic tax cut and widespread tariff imposition. Anyway, the global economy try hard to be better positioned to handle the U.S. trade isolationism. This may accelerate the shift in trade and investment focus from politics to economic fundamentals from the U.S. To European countries.
Mm-hmm. So even though Trump has postponed this universal tariff policy for now, saying it's not ready, but if he does proceed with it, when do you think it will happen? And what kind of impact would this have on South Korean companies, Professor Oh?
It will unfortunately eventually happen because it was a campaign promise of President Trump. When he was a candidate, President Trump called for universal tariff, as Professor Kim commented about it. Many economists warn that such plans could cause price shocks starting from the necessity goods, and many Republicans in Congress might have criticized them. The economy expert could add comment that the wage increase resulting from high tariff can accelerate the inflation. Anti-immigration policy could stimulate the price of import goods and services in the United States, at the same time chipping away at workers' real income. This may be very difficult to reconcile with promises of low interest rate. Instead of one-shot imposing tariff, economic analysis would be needed by region, by industry, and by countries, which means it takes time. In this respect, President Trump needs time to dilute the political burden and economic effects of universal tariff introduction. When this factor is considered, then it is expected to take steps of initializing specific universal tariff system from the second half of this year. When it is ready and materialized, then President Trump's America First and protectionist policies will be a perfect storm of rippling diplomatic tension with major trade partners and so on, like that. We have to prepare for that.
Right. So he's in the process of, thinking about the pros and cons actually about his decisions. But even though he has postponed the universal tariffs, he started to specify tariff pressures on Mexico, China, and Canada, like we've mentioned, 25% on Canada and Mexico and 10% on China from February. Professor Kim, what is the background behind this? And do you think this could be a card for renegotiating the U.S.-Mexico-Canada agreement?
Yes, I think so. It is basically much about increasing the U.S. leverage in trade and also the non-economic issues, such as the border controls and stuff like that. So it has the dual purpose. But as you mentioned clearly, this is about to bring Canada and Mexico to the table and keep pressuring both nations into renegotiating this USMCA, the U.S.-Mexico-Canada agreement, ahead of its scheduled 2026 review. So it's actually supposed to happen next year, but I think clearly the Trump administration wants to preemptively move. And of course, the economic part about this is more about to revise these automotive rules within the trade pact to encourage car manufacturing to reshoring, to return to the U.S. And this also has impacts on South Korean car makers. So this prompted automakers to explore ways to satisfy this new administration's demands without disrupting the North American supply chain. And clearly already adjusting to uncertainty and scaling back hiring, investment, as Professor Mo mentioned. I think those kind of things are already happening, and probably it's going to exacerbate economic disruptions and potentially inflation. And also I think this is about to make this the revenue source actually somewhat diversified, as he overtly mentioned. So clearly it is going to happen, and basically for renegotiation, this kind of the preemptive movement always helps, and this is typical the Mr. Trump's style of renegotiation.
Right. So Professor Kim kind of touched upon South Korean car makers as he went on. Many South Korean companies have entered Mexico and Canada as key gateways to the North American market. So if the U.S. imposes the 25% tariff as planned, what kind of impact would it have on South Korean companies, Professor Oh?
We have to pay attention to the trade tension between China and the U.S. first. China might be, it is very likely to take a trade deflection strategy. is a round-tripping trade to avoid the rule of origin. It might be a situation that there are two options when you take a flight directly from Beijing to New York, and then the other one is make a transit in the middle of, for example, the Incheon airport like that. So instead of direct trade from China to the U.S., Chinese product will export to Korea first, or to Canada and Mexico first, and make a transit trade from Korea, Canada, and Mexico to the United States. This is why Chinese investors had made already foreign direct investment into Korea, Canada, and Mexico. Korea also had also made FDI into Canada and Mexico. As a result, the U.S. will build a trade barrier higher and make rule of origin rule much more complex. Finally, Korea lies on the fault line of the U.S.-China tension. In the head-to-head conflicts, there will be a risk for Korea to become something like a sitting dog in the geopolitical situation. So one of the most important strategies Korean companies must lay out is a suggestion and participation of a comprehensive high-tech policy partnership, including unparalleled cooperation with capable allies. Year 2025 is very, very important. This is the 75th anniversary of the Security and Defense Alliance between the United States and Korea. And then Korea is ready for this kind of anniversary. Especially Korean companies prepare for making strategic alliance of establishing the international technology standard in the secondary battery and EV sectors more than anything else. This is a very good chance for Korea.
Mm-hmm. Now, what about for China? Trump has stated that he is considering a 10% tariff in China starting February. But during his election campaign, he's been, pledging to impose tariffs of up to 60% on Chinese products. Professor Kim, how do you foresee the future of U.S.-China tariff war?
And at this stage, it's a bit uncertain, as always, for the case of this type of issue, especially with the new administration. At least my view is, the one possibility is the Trump administration might escalate the tariffs from 10% to eventually some higher number, probably not 60%, but I think that's one possibility. Otherwise, this much lower tariff is more like, to me, it's more like a sales tax type of thing. So if we remember his inaugural speech, he mentioned specifically this new agency called External Revenue Service in comparison with Internal Revenue Service. So clearly, I think he seriously thinks of this tariff as a main source of revenue, in addition to this tax being levied and collected for the domestic, the firms and individuals. So clearly, the Trump administration is going to continue to have the lower tax policy and also have some extra, the alleviations of the tax rate. So clearly, you need some budget sources because already, the U.S. Budget deficit is pretty high. So I think to smooth out this type of the fiscal deficit issues, I think he needs some extra income source. So if that is the case, then just too high a tariff tax where the tax rate is going to prevent the U.S. government from collecting more revenue, because if the imported price goods actually increase too much as a result of tariffs, then consumers are not going to buy these products, and therefore that's going to be actually negative to the revenue part of this the policy. So clearly that's one case. Of course, the inflation is going to be another issue that Trump probably is contemplating. He talks about 60%, but given that a lot of goods are imported to the U.S. for everyday consumption, this is going to increase the cost push, actually, the chance of inflation. So clearly, I think he is trying to just moderating a little bit, but at this stage, it's a little bit uncertain.
Right. So it's interesting. Professor Kim has mentioned Trump is considering this tariffs as a part of a source of revenue. In response to then Trump's tariff threats, Professor Oh, then what kind of measures should the South Korean government take to minimize such damages? And what are some ways to strengthen export capabilities?
Economic diplomacy is needed desperately at this juncture. In the size of international trade, President Trump will hand out a rigorous test sheet. Korean government have to answer the questions, and then Korean government have to find the answer in the side of international investment. In explaining the approaches and solutions, Korea have to write an essay to keep an eye on enhancing cooperative relationship in the name of FTA, SEPA, DPA, whatsoever, to level the negotiation ground. Korea has to cope with the growing dilemma of dependency on Chinese market, but being unable or unwilling to decoupling from Chinese supply chain reformation, so-called crowding the U.S. out of the supply chain strategy. Korea also, including major U.S. trade partners, seek to strengthen their security and defense ties in the U.S.-allied supply chain, something like cheaper alliances like that. In this sense of defragmentation risk management, the private sector take a great role. Korea must maximize its strengths as a global exporting power with a highly educated workforce and capitalize on smart investment in cutting-edge technologies to move up the supply chain and deftly balance its alliance with the United States. Korean soft power and Korean culture export might be a good leveraging instrument. All the time, Korean government must not forget that Korea is likely to fall victim to the escalating trade disputes among the United States, China, and now the European countries.
Right. And like both of you mentioned, many economists have been suggesting that the policies of the Trump 2.0 administration may worsen America's inflation situation. Given the current trends in prices, Professor Kim, how do you assess Trump's immigration expulsion policies and the declaration of the national energy emergency as mentioned in his inaugural speech?
I don't know that much about the long-term effect at this stage because in the long run, if the Trump administration is trying to make the legal barriers for the immigration somewhat weakened, as argued by some of the his sides, such as Elon Musk and others, are actually talking about making the H-1 visas actually more accessible so that they can import high-level human capital better because they need this type of things. But economic growth comes also from the other industries such as agriculture, construction, service, and these kind of more basic stuff. And for this, I think the cheap labor or very it's unskilled but still cheap labor from the nearby countries have been very important, one or the other. So I think this type of expelling significant portions of the workforce is going to have very, the negative impacts on the labor cost. So it's going to increase this and also still constant, in excess mode of demand. I think for this type of the labor force, it's going to just lead to labor shortages, therefore driving up wages, production cost, and this is going to be a classic cost-pushing inflation problem. So in the short term, clearly it will have some negative impacts depending on how the administration handles the the visa issues and the more kind of the lenient approach for the higher human capital, and also spill down the over effects actually to other areas, may just weaken this problem in the long run. But at this stage, it's somewhat difficult to predict for the long term. In the short term, clearly, it's going to exacerbate the inflationary pressure.
Right, so we'll really have to see. Let's also touch upon the interest rate before we go. There's speculation that the Fed may keep the key interest rate unchanged until the end of the year due to the new administration in the U.S. Professor Oh, what do you expect for the outcome to be in the upcoming FOMC?
At this moment, due to President Trump's signing uncertainty in the Oval Office, the interest rate forecast cannot be inferred from the logics of economy in the area of stochastic chaos theory or something like a fortune telling. Finance experts expect the Federal Reserve will cut interest rate in 2025, but not that much. Short-term interest rates are expected to end 2025 close to 4%. This forecast assumes that the U.S. economy continues to grow and the unemployment remains very, very stable, slightly above 4%, and the inflation ends 2025 close to 2.5%. If the economy performs differently than these expectations, then the interest rate overall will evolve and vary too. And markets see almost not that much chance that policymakers will cut their key interest rate. However, Fed Chairman Jerome Powell's news conference will shape expectation for the subsequent Fed meeting in March, and then the market wait for his comments.
Mm-hmm. Now, let's also touch upon Bitcoin situation. There's no mention of cryptocurrency-related policies in Trump's inauguration, but he's been mentioning about it since his campaign. Professor Kim, what's your outlook on Bitcoin and during the Trump 2.0 era?
It's going to be a bumpy ride, but basically the price of the Bitcoin goes up a lot if there are more potential buyers actually waiting. And because of this big anticipation about the Trump's positive, wordings about the Bitcoin and other crypto, I think the price has been going up in a very significant level. So depending on how the Trump's, wordings about well, we should keep buying some of these and we should be the leader country, blah, blah, blah type of things. If it keeps getting generated, then I think, we will see the huge, also another 20-30% increase. Otherwise, we will actually see kind of the sideways movements around 100,000, between 90K and 100K. And that's actually what I expect for the time being.
Right, because it came up a little rapidly in the past few weeks. Right. All right. I'm afraid we'll have to leave up our discussion right here. Many thanks again for your insights, Professor Kim and Professor Oh.
Please, mine.
Now, that'll be all from us on Within the Frame. Be sure to tune in next time as we continue to explore the stories that matter. Until then, stay informed and engaged.